Welcome back, investors. This is W from W Investing, and I'm going to do a little bit of a prediction here with the price of gold. Gold has been a hot topic of late just because it has dropped over $100 an ounce. So basically what happens with gold is it consolidates around its 200-day moving average and then seems to go higher every single time during the current bull market. The bull market pretty much started back in 2001 when gold was about $225 an ounce, and today it's up around $1,600 an ounce. This is a chart on stockcharts.com of the GLD, which is the Spider Gold shares. If you search gold on stockcharts.com, the chart will be a day late because they don't put the chart up until after the market closes. So this is why I'm using today's chart so you can see where we sit. Today, gold's down about $4. This is 321 Gold. I'll put the links to all the websites I use in the information, but gold's down about $4. That's nothing compared to what it was earlier today. It was down well over 15 or close to 20 bucks earlier today, and it has fought back. If you look at silver, silver's not fared as well. Silver's just tanked all day. It's down almost $1. Looking at the silver chart, it's completely different from gold. It just gapped down and has been down almost 3% all day. It just cannot break above its 20-day moving average, which is the green line here. Silver's been a lag for quite some time. If we look at a long-term chart of silver compared to gold, it's almost humorous, to be honest. Let's look at a 3-year chart. So the 3-year chart of silver, you'll see at $50 an ounce, it's just been crazy volatile. We had days down 8 and 9% in here, and once again here, it dropped a ton back at the end of 2012. We tried to fight back, but the 200-day moving average served as huge resistance around 35. So we're back down to about $30 an ounce. And this chart is just ugly right now. It's trying to make a triangle type pattern, but we need a break above this resistance line here, which is going to end up being the 200-day moving average. As far as gold looks much better to me than silver, and you'll see why if I do a 3-year chart of gold compared to silver. Gold is a much more tight range. It looks better. The chart's more solid, as you'll see. So every time gold gets close to its 200-day moving average, it bounces. Honestly, this little area looks kind of ugly, but we are close to the 200-day moving average. I don't like the cross of the 50 under the 200, but I'm still bullish on gold long term. I think that eventually the stock market's going to have a pullback or a sideways consolidation, and when that happens, a lot of people are going to invest their money in gold, which should push it to a new high above $2,000 an ounce. As of now, this is a good time to buy because your risk is pretty low. The lowest it'll probably go is $1,500 an ounce, which was the low back at the end of 2011. If you want some more investment advice on gold, I'm probably not the best as far as gold. I'm more of an equities type guy, or a guy who picks stocks. So as far as gold, Zeal LLC is a great resource. Adam Hamilton writes some very good articles that will help you understand the direction of gold long term and short term. I don't know Adam, but I've been reading his column since about 2007. And he's been spot on every time. He predicts bottoms. He predicts tops. He uses long-term charts. As you can see, this is a chart from 2009. And don't try to digest all the information. Just notice the direction of gold here and notice that it's in a trend. And we're at the bottom of that trend channel. So basically what I'm going to predict here is that gold in the near future will be a stable investment. I don't think you're going to get 30, 40, 50% returns quickly unless we break out of this downward movement. That being said, it's still not a bad investment in the current economic environment, especially with the market dropping below its 50-day moving average. But we'll just have to wait and see what happens. If you have any comments on the price of gold or the stock market in general or investing in general, please comment below and like this video if you do in fact like it.